Granoff Chapter 3, Budgetary Accounting Overview. Our coverage, key purposes of budgets, need for more than one type of budget, benefits of performance budgets. The key purposes of budgeting: planning, controlling and administering, reporting and evaluating. This is the loop. Before the period begins, we start with the planning. During the fiscal year, we control and administer. And at the end of the reporting period, we make the reports and we evaluate. Major types of budgets: the appropriation budget, the operating budget. This incorporates the expenditure authority granted by the governing elected body. The authority to spend comes from the appropriations. This monitors current or operating fund, for example, the general fund. The appropriation budget typically covers one operating cycle. A surplus or profit is the excess of revenues and support over expenses or expenditures, depending on whether it's full accrual or modified accrual accounting. A deficit or loss is an excess of expenses or expenditures over revenues and support. The appropriations budget. Public attention focuses on this budget because it determines the amount of taxes and other revenues that must be generated to cover expenditures. The budget includes estimated revenues, other financing sources, other financing uses. These budgets may not be needed for Special Revenue Fund, Capital Project Fund, Debt Service Fund because there may be adequate controls over spending. However, some type of budget is needed for all areas of the state and local government. The importance of government budgets. The general fund and special revenue funds usually require a legally adopted budget before the government can collect revenues from taxes and other sources and incur expenditures. Severe penalties may exist for failure to comply with the budget, so it is imperative that the accounting system facilitate accounting for the budget as well as all other operating transactions. Let's look at performance budgets. Supplement to object classification budgets. Focus on measurable units of efforts, services, and accomplishments. Institutionalize effective decision process. The most common type of performance budget is a program budget. Other budgets. The capital budget monitors construction and acquisition of long-lived assets, typically covers multiple years. Special types of budgets: special purpose budgets, performance budgets, flexible and zero-based budgets. These contain alternative budget estimates based on varying levels of output. This helps distinguish fixed and variable costs. These are most useful to business-type activities where the level of activity depends on customer demand. Let's look at expenditure and revenue classification. Expenditures. We're drilling down from the fund. We're looking at the organization unit, the function or program, the activity, the character, the object classification. And we actually use this drilling from the fund to the object classification to set up the chart of accounts and the account numbers. Revenues classified by fund and then source. So example, classified by general fund and then the source. Special revenue fund, then the source. So we're looking for taxes, license and permits, intergovernmental revenues, charges for services, fines and forfeits. So you can think of these as the types of revenues that a state and local government generates. Let's look at the classification of expenditures. Again, we're starting at the fund. Examples: general fund, special revenue fund. We know the 5 governmental funds. Then we drill to the function or program. The definition: the group of activities carried out with the same objective. The function: public service, public safety, education. Examples: general government, public safety, sanitation. The organization unit, so it may be general fund, public safety, but now we're looking at the police department, the fire department. Then we look at the activity. The definition: the line of work contributing to a function or program. The highway patrol, burglary investigations, these are activities within the police department. Next, we look at the character. The definition, the fiscal period presumed to benefit. Is it benefiting the current fiscal year? Is it a capital expenditure? Or is it a debt service expenditure? What's the character? And last, we look at the object. The definition, the types of items purchased or services obtained. Here is the first time we've considered salaries, fringe benefits, travel, rent, utilities, these things that we usually think about on an income statement for a business, but these now are part of this classification scheme. Fund to function or program, to organization unit, to activity, to character, and then to object. Classification of revenues and estimated revenues. The revenues are the actual, estimated is the budget. So the GASB suggestion is to first classify by fund, just as we did with expenditures, and then by source. The sources, taxes, special assessments, license and permits, intergovernmental, charges for services, fines and forfeits, miscellaneous. So we're classifying the source into the fund. Remember our 5 governmental funds. Object classification budget, the traditional and most common, characterized by expenditure classification that categorizes objects. This facilitates control. The drawback, discouraging planning, promoting bottom-up rather than top-down budgeting, overwhelms top-level decision-makers with details, and limits post-budget evaluation. Basis of accounting, neither the GASB, which is in control of state and local governments, or the FASB have control over budgeting principles. Budgeting principles are directly set by either the government organization or the government organization that supervises them. GASB recommends modified accrual basis of accounting for budgeting for the governmental funds. However, most governments use the cash basis, and this does require a reconciliation schedule. So don't be surprised if you find that the state and local government is budgeting based on the cash basis. If it's a governmental fund, the accounting we must use the accounting principle that's required, is what I'm trying to say, requires modified accrual basis of accounting. Legally adopted budgets versus GAAP-based financial statements. This is what I was alluding to in the previous slide. We have the legally adopted budget adopted by the governing body before the accounting period begins, and that can be modified accrual or cash basis. Now, during the accounting period for the governmental funds, we are required to use modified accrual accounting, current financial resources. So there are the differences that arise between the legally adopted budgets and the GAAP-based financial statements. These are caused by the basis of accounting, the timing, the perspective, or the reporting entity.